I was speaking to Ian Cruikshanks a little earlier. I don't know if you caught that part of the interview. We were talking about a full-year diluted headline earnings per share of 17.2 cents, total dividend per ordinary share of 54 cents, special dividend of 40 cents.
Yes. In fact,
disparity between those numbers, so please explain for us.
I think that actually the ordinary dividend is at 14 cents, and we paid 40 cents additional dividend. So in total, it's 54 cents to our shareholders. So the ordinary dividends in line with our dividends cover came at 14 cents on the back of the earnings, and we've had some corporate activity, and we received quite a lot of cash from the sale of Destiny to Verifone. So that actually gave us excess cash.
Excess cash, and then obviously, rewarding shareholders.
Absolutely.
For this. Because we've actually seen what we saw, your dividend was down from 23 cents the previous year to 14 cents this year. 100%.
I mean, I think the earnings downfall is very much a result of the technology group. I think in the technology group, last year operating profit was at 52. We came in at a loss of -6. So it's been a very tough times for the technology group, but also it's a reflection of the economy as well.
Okay, you spoke of the cash proceeds with regards to the sale of Destiny, 2 strategic acquisitions, UCS assets and the Canoa Group. How have you bedded down those acquisitions?
Well, I mean, those acquisitions have actually exceeded our expectations in terms of that. The UCS, we bought 5 assets out of UCS. 1 we sold to Verifone, as I said earlier on, but equally important, there was a profit warranty, and they've met that profit warranty. Canoa, we've got 50+1 share investment in the Canoa Group, which is very much part of our managed printing strategy, and that also has met more than its expectations. The profit warranty runs till 2013.
Also quite impressive with regards to your gross margin. That improved from 28.6% to 30.9%. What contributed to the increase in margin?
It's very much on the, I think, on the back of the acquisitions. I think the UCS, as I touched early on, was to enhance our earnings. It's very much strong in the vertical, in the retail vertical, and also the Canoa acquisition as well. But some of the improvement also came with our traditional services business.
Annuity revenue increasing by around 4%. A lot of clients now wanting to move to the cloud. How is this going to affect annuity? Would you be able to actually shift one to the other?
We'll still continue to have a strong annuity revenue. I think moving from the traditional outsourcing to the cloud, what it does is that it brings a lot of more economies of scale, but it still comes with annuity revenue. So in the beginning part, the revenue might taper off, but it picks up again as you get more and more clients to the cloud.
What is going to be done to address some of the issues with regards to the underperforming divisions?
We've already taken decisive action. We've already taken decisive action in terms of the changes in the management, in terms of the restructure costs that go with that. So we're going into this new financial year, that behind us, so we've taken appropriate action. I think this economic condition is tough for quicker actions. You don't have the luxury of waiting for 3 to 6 months.
Are you talking of job losses here when you speak of restructuring costs? Restructuring costs.
Job losses, and very much as well bringing new management, bringing new thinking as well.
One of your biggest expenses is staffing at this point in time. How important is it to also retain talent in the same breath?
It's very critical to do that. I think what's been affected, I think this wasn't a company-wide restructure retrenchment process. This was very much looking at underperforming units. We've addressed that. But I think equally important, our staff love working at Business Connexion. We're a technology provider. We're one of the biggest IT services company. So it brings a lot of opportunities and growth as well.
Okay, we're talking of the cloud, and we know that it's actually becoming very much a very popular strategic element for a lot of the IT companies in the country. And again, I always ask this question when I speak to CEOs such as yourself. What is going to differentiate you within the cloud space relative to the other players?
Look, I mean, one of the key differentiator for us as a business is that the majority of our clients are blue chip clients, and we've been able to secure them in our data centers, in the offerings that we give them as well. But equally important, I think our biggest differentiator is our people, our service delivery, but also we've got a track record in terms of delivering to the enterprise.